net minority interest. This applies if a firm is a subsidiary that they do not own 100%, because by law, uh, you have to consolidate, but consolidation assumes that you own 100% of that subsidiary. But if you do own less than that, you have to correct for that. That's why we want this. In the CMG case, this is equal to, just pay attention to units, okay? Not every firm has the same units, so this is in thousands. Total minority net of minority interest, 6060010. This happens to be in thousands for CMG, but for your company, it may be different. Pay attention to it. Because if you don't, I'm measuring the market value of equity in billions, but if you don't uh, make that correction, it's going to look like that, you know, these guys have a lot of debt, even though they don't. Hence, in billions, remember, a billion is a million thousand, right? It would be six. I mean, I can do that in my head, but hey, if you can do it, hence total market value of assets is equal to market value of equity plus market value of debt. And 40.68 plus hence rate of equity is market value of equity divided by market value of assets. 40, no, this is 6.06. And you're not telling me that I was doing it wrong. Let's put the dollar sign here. 40.68 divided by rate of debt is simple. Market value of debt. I'm going to give you guys the PDF of this So if you're missing anything, you can look at it. Highlight this. 6.06 divided by 4674. And since we have only two types of capital, if you calculate one of them, you can calculate the rest easily. Rate of debt is equal to 1 minus rate of equity. So they have to add up to 1. All right. Okay. That's the first thing that we need to find out. And let's remember what weighted average cost of capital is. Rate of equity times cost of equity plus rate of debt times cost of debt times 1 minus tax rate. To find the tax rate of the company, use the latest trailing 12 months income statement and find the ratio of taxes due plus earnings before taxes. Again, doing it for PMG or CMG, we're going to do income statement. Whether you do annual or quarterly, trailing 12 months is going to be the same. What happened here? Oh, there it is. Tax provision. That does not necessarily mean that's the actual taxes they have paid, because sometimes you can defer taxes or pay it early, but this is the provision, how much the firm imagines that they will pay eventually, not necessarily, that fiscal year. If this was an advanced class, we would have worried about deferred taxes, yada, 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 but we're not going to worry about it. 478,380 in thousands. I think in thousands. Yeah. Man, they're paying a lot of taxes. $478 million income before taxes. Pre-tax income. Unfortunately, there is no one standard for that term, but you can figure it out from the context. 2014973. And its tax rate is 478,380 divided by, since units are same, I'm not converting them to billions or anything. That's actually pretty high. And as an example, let me show you. Example. Come on. What the hell is going on here? I don't want to sign into anything. I'm just going to calculate it off camera. Tax provision 20. So they're paying $200 billion in taxes. What the hell is going on? I don't remember putting it. Period. Oh, I'm in Turkish standards. What we use for comma, we use dot in the European and vice versa. 15.6%. By the way, probably most of those taxes, about 10, 12% is probably the Irish corporate tax, and the rest are the state taxes. Because Apple doesn't pay much in federal taxes. Good or bad, I don't know. Okay. Come on, I did not want to do that. Oh, God.